Markets in Europe this morning are trading marginally higher, with the UK's FTSE 100 index up just a couple of points, up around about 5 points, while the Euro Stoxx 50 index is higher by 11 points. FX markets are subdued. Gold is taking a bit of a beating. It's actually down around about $22 at the moment, so pretty poor performance in the commodities sector on the whole. And when it comes to peripheral bond yields, we're a little bit wider across the board. And lastly, on core government bonds, again, nothing much, pretty stable. Good morning, I'm Ishaq Siddiqi. Welcome to your daily market bite. I'm going to give you a quick idea of what's going on in financial markets today. So it is Friday, the best day of the week, as we all know, and it is payrolls day today, the eagerly awaited, most anticipated jobs number from the US economy. Comes out the first Friday of each month, so we are going to see the number for July. Now, expectations are for a very strong number, above the 200,000 mark. Also the unemployment rate edged down to about 7.4%, or maybe perhaps 7.5%. Currently it stands at around about 7.6%. Now, when it comes to the payrolls data, we've had a number of positive economic data signals out from the US in the past few weeks that would suggest that the US labor market is performing very strongly. We had the ADP report out on Wednesday, which showed 200,000 US jobs were created for the month of July. We also had yesterday's ISM report on from the manufacturing sector, and that also had a very strong performance in the employment component. We also had strong jobless claims as well. It all suggests a pretty encouraging outcome for the payrolls today. So investors are quite optimistic that we are going to get a report which moves past this whole Goldilocks too hot, too cold report, and actually goes more into the to a favourable report which sheds some more optimistic light on a US recovery being a bit more sustainable than we previously thought. That does mean, however, that the Fed will hasten their resolve to taper quantitative easing, which has so far given the markets a lot of food for thought. Now, when it comes to tapering QE or not tapering QE, we had the FOMC the policy meeting on Wednesday. And at this policy meeting, what we finally understood from the Fed is that they are maintaining a highly accommodative policy measure, which means that QE is here to stick around until they feel that we're going to see a significant improvement in the labor market in the US. That means that they're looking for the unemployment rate to edge down to around about that 6.5% level. So that's 1%, more than 1% off the current levels that we're standing at. There's a long way to go, so we're going to need to see over 3 or 4 payrolls report over the next few months to come in over 200,000 jobs. So it's not really something that investors are concerning themselves with right now, that we're going to get tapering immediately. At the moment, investors are more encouraged by the fact that we are seeing robust signs of recovery coming out from the US economy. Now, speaking of the US economy, the ISM report was very strong yesterday, and that pushed indices in the US to fresh record highs. The S&P 500 moved above the 1700 mark, a level which it's never passed before, so a very strong signal, and that inspired a very positive session in Asia overnight, with the Nikkei index in Japan leading the gains. Now, going into the European session this morning, we haven't had that same sort of enthusiasm, given the fact that we have had a pretty positive week, and investors are staying on the sidelines ahead of the payrolls report, waiting for more data before we actually start getting involved. Nonetheless, it is a broadly positive risk tone on the whole. We are really just waiting for the payrolls number. We've had some corporate news to contend with, most notably numbers out from World Bank of Scotland in the UK, and our RBS numbers were pretty weak on the whole. with the bank putting aside a huge amount for penalties and litigation, but at the same time they have hired a new CEO, so a fellow called Mr. Ross McEwen, who was previously at the Commonwealth Bank of Australia and last summer was appointed as RBS's head of retail banking. So there are a lot of hopes that this chap will be able to steer RBS in the right direction and continue the work of Stephen Hester, who was seen as a bit of a market favourite and a character that managed to steer RBS into the right direction, preventing it from financial collapse. Other than that, not much else going on, so keep your eyes out for that payrolls number. It's the big one, and I'll see you guys on Monday. Have a good weekend. Cheers for watching.